to Retire Smart Maryland. My name is Cynthia Defazio, and I'm joined today by Prashant Sabapathi of Elite Income Advisors. Prashant, how are you?
I'm doing great. It's nice to see you again.
It is so nice to see you. I can't believe how fast the week goes in between when we're filming the shows. It's like, oh my gosh, here we are again. And I'm always excited to see you because I know that things have been so incredibly busy.
Yes, they have. They've been really busy at the office, which is a testament, I think, to the work that our team does on a daily basis and to the success of the show. I mean, the show's been great. We've gotten so many people come in to actually visit with us, make sure that their plan is going to withstand some of the tougher times that we've really been seeing in the last, year and a half or so. So it's been good doing the show, and it's always good to be back.
Well, I love having you in the studio, so thank you again for always taking time to do that. Today's topic I'd love to spend some time talking about, and something I've been researching a little bit on the internet, is how do you find the right financial advisor? So I came up with 15 questions actually that came up, and I thought you and I could kind of talk through those a little bit today.
Love it. Yep.
So here's the first one, and it seems like people are a little hesitant to ask about this question, but what are your qualifications and credentials? Is it okay to ask about educational background, certifications, and professional designations? Is that okay? What are your thoughts on that, Prashant?
Look, I think when it comes to your money, I think you have to be asking those questions. I mean, it's almost like, would you ask your doctor those questions? I think you probably want to know where they went to medical school. You probably want to know where they went to college. And so why wouldn't you ask your financial planner those questions? I think it's really important. And to kind of just back up and set the stage here, I think that whenever you're considering partnering with a financial planner or a different firm, I think that you have to align on certain things, right? Number one is you have to align on investment philosophy, okay? Number two is you got to be able to align on the way that you communicate with each other, okay? I think that's one thing that may be lacking is people don't know what to expect in terms of communication when it comes to their advisor.
That's true.
And number three, I mean, as simple as this sounds, you have to like the person that you're dealing with, right? Like you shouldn't have to say, oh my goodness, I have an appointment today and I'm dreading going in to see whoever you're working with, right? So I think that's kind of how we set the stage is start with those three things. And then, of course, we're going to go through some of the questions you have to ask.
And I would love to dive in even a little bit further, Prashant, if we could, because obviously there are different types of advisors. Let's talk for a moment about the difference between working with someone that specializes in the accumulation years, if you will, versus the distribution years. Why is that important, especially approaching retirement?
Look, I think that, the big box retailers of firms out there, they specialize in managing money, okay? But managing money on its own is not the same as financial and retirement planning. Okay, because you may get a statement from your brokerage firm that shows you how your money performed for that month or that quarter. But what it doesn't tell you is it doesn't tell you how that money is going to be taxed when it comes out. It doesn't tell you when you should collect your Social Security benefits to make your retirement as fulfilling as possible. It doesn't show you how long that money is actually going to last and whether or not you're in danger of having that money run out. And so I think there's a huge difference between the big box retailers, so to speak, who focus on helping people grow their money. I think it's really important that you work with a specialist to help you make that money last the rest of your lifetime, manage the tax consequence along the way, and most importantly, I think, is make sure that you have enough income coming in to be able to live your most fulfilling version of retirement.
Prashant, thank you so much. This is the next great question, I think. It says, how long have you been working as a financial advisor? Inquire about the experience in the field and whether they have dealt with clients in similar situations to yours. Why do you see that as being a key question?
So number one, you want to know what the core competency is of the firm or the person that you're dealing with, right? Like, for example, at our firm, we have 4 or 5 advisors at our firm that have been doing this for literally decades, right? Nick has been doing this since the early 2000s. Same with Ozzy. Bruce is another advisor that we have in the office. He's been in the business since the mid-90s, and so we have a lot of people at the office. Mike at our office has been doing this a really long time as well. And so the reason that's important is because when you go to work with somebody, I think you want to understand how they actually engage with their clients, meaning when you're working with one person, is it that person that's designing the plan, or do they have a team surrounding them that helps design each and every plan? And I think that's really important, because even though you come in, you might meet with Ozzy, or you might meet with me, or Mike, or Bruce, or Nick, or whoever, our entire firm builds that plan together for you. And we have a team that we partner with of certified financial planners that help us build these plans out for the folks that we see as well. So I think it's really important to understand how your team is going to work together to create your plan. There are no cookie cutter plans when it comes to the work that we do. When you come in to visit with us, you're coming in, you're going to let us know what's important to you, and then we're going to help you build a written retirement plan around the things that are important to you, not the things that are important to us, the things that are important to you.
I love that. And Prashant, this is another great question before we go to our first commercial break. I love this one. Are you a fiduciary? Fiduciaries are legally obligated to act in your best interest and ensure that your financial advisor operates. Why is that important?
You want to know that the advice that you're getting is in your best interest, and you need to feel really confident about that before you make any big, potentially life-changing decisions. You want to make sure that the advice you're getting is in your best interest. And so that is the importance of working with a fiduciary. Like, I'm a fiduciary, right? Which means every time I sit down with somebody, we're taking essentially an inventory of what they want to accomplish, and then we're going to custom build that income plan or that Social Security maximization strategy or the portfolio stress test. We're going to build those things around your objectives. And so, you know, not every person that comes in to visit with us becomes a client, but I feel pretty confident in saying that every person that visits with us at least has a really good understanding of why we recommended the things that we did.
Yeah.
Because they'll be able to look at it and say, if I do this or this or this, it's going to help me accomplish this, this, or this.
Yeah.
And I think the problem with the industry that we see today is there's so many advisors out there that are in it just to sell stuff, right? And, you know, that's not what you need when you get to retirement. So that's the importance of working with a fiduciary. What I'd love to do is just open up our phone lines. We do this every single week, but we're going to open up the phone lines. This is exclusive to our TV audience. The phone number is 833-308-5200, 833-308-5200. When you call that number, you're going to have the opportunity to schedule a complimentary, no obligation visit with our team at Elite Income Advisors. When you come in to visit with us, we're going to take you through a comprehensive planning process that will allow you to have a written retirement plan that looks at several different aspects that you need to have. Number one, we're going to take you through an income for life plan. That income for life plan is going to show you how much income you are projected to have after taxes and after inflation every year for the rest of your life. We're going to put you through that portfolio stress test, let you know how much risk you're taking and whether or not it's too much risk for you to be able to retire the way that you want to. The third thing we'll talk about is taxes. Okay, we need to understand how taxes will impact your retirement. We're going to help you through that by creating this Retire Smart roadmap. All starts with that phone call. And by the way, our operators are standing by. Okay, it's not a toll-free number. You have to have your appointment book ready to go. It's 833-308-5200. Alternatively, you can scan the QR code at the bottom of the screen. You can also visit retiremaryland.com. I'll tell you what, we've put out a lot of different ways to get in touch. People just have to get up and get started now.
And it's also such a blessing that you save time for people that are just actually coming in off of today's show.
That's
because
right.
You're so very busy, but you actually have that time just to carve out. So
yeah, it's all about education, and so we're glad to do that. It's very fulfilling when we're able to help somebody.
Prashant, thank you so much. To our viewers at home, that number to call is on your screen, 833-308-5200. We're going to take a very short commercial break here on Retire Smart Maryland, but don't go anywhere. We have more of the top questions that you should be asking when you're interviewing a financial advisor. Stay tuned. We'll be right back momentarily.
Before COVID, we were around 4 or 5 people.
It's a pretty tight-knit team that we have.
But now we are growing, and we have about 14 people right now.
It's really 4 or 5 advisors and 4 or 5 support folks, plus an accountant, CPA.
What I'm trying to really create is the family place that everyone loves what they do and enjoys helping the client. My parents, when they had their own company with my father, everybody liked the work because he liked to take care of the people, he likes to help the people, and I'm trying to establish the same thing in our company.
It's very much a team, kind of family-like culture at our company. You know, we hang out outside of work. We care a lot about each other's personal lives as well.
Welcome back to Retire Smart Maryland. My name is Cynthia Defazio, and I'm joined today by Prashant Sabapathi of Elite Income Advisors. And what a great show we're having today, Prashant. The top 15 questions that people should be asking when interviewing a financial advisor. Are you ready for the next one?
Let's do it.
This is a good one because obviously people are so leery to talk about this, but how do you charge for your services? Ask about their fee structure, whether it's a percentage of assets under management, an hourly rate, or a flat fee. Clarify any additional charges or potential conflicts of interest. Yeah. Why is that important?
I love that you said conflicts of interest because, you know, how things used to be done, and to this day, some people still do it like this, is you would buy an investment, you would get sold an investment, let's say, and your advisor would get a commission right out of your pocket when you were sold that investment.
Interesting.
And that is really kind of a dangerous way to engage with your advisor. I mean, if your advisor gets a commission that comes out of your investment when you buy something, does that person have an incentive for them to do a good job for you in the future?
Well, not to do a good job, but an incentive to sell that product.
They're incentivized to sell the product. Exactly. So,
household, yes.
You know, when we deal with investments, we prefer and we do only work in a fee-based capacity. Okay, so what I mean by that is when our clients do better, we do better, right? That means my entire team is incentivized to do a good job because all we care about is our clients being successful. The more successful our clients are, by nature, the more successful we become. So of course we have a vested interest in our clients' success, and I think that's really, really important. But before you even get to how you're going to get charged, I think that you have to determine whether or not your advisor is actually the right fit for you. I've met with folks who have several $1 million, and we find, and I know very quickly, that they're just not a good fit for the work that we do, right?
Yeah.
And then I see other people who maybe haven't saved quite as much, but they're an excellent fit for what we do. And so I think before you figure out what you're going to be charged and what the fees are going to look like, make sure that your advisor is the right fit for you and make sure that they are going to help you accomplish what you want to accomplish. Yes, we have the people that have $1 million, $3 million, $5 million, but we also have people that have $250,000 or $500,000 because we're able to put a plan together, a written plan together that helps them along their path in retirement.
Prashant, thank you so much. This is the next question. What services do you provide? Determine the breadth of their services, including financial planning, investment management, retirement planning, tax planning, and estate planning.
You know, we were talking about this on a previous show when Mark Henry was here hosting, and we had a lot of fun on that show. But one thing we talked about when we did that show was this idea of having to go to 3 or 4 or 5 different professionals when you need something, right? Like when you come in to visit with Elite Income Advisors, we have a CPA that is on staff. So you got a tax question, I could bring Stephanie in from 2 doors down the hall and she'll be able to help you answer those questions, wonderful. Right? Now, of course, you want to have a team that's helping you through your situation, whether it's estate planning, whether it's long-term care planning, Social Security planning, tax planning. all of these different things need to be addressed, but they need to be addressed in a coordinated way. You don't want to have to go 5 different places for 5 different things and then make it your responsibility to make sure all your professionals talk to each other and make sure that they're all on the same page. I think it's just easier if you have 1, maybe 2 professionals that are helping you so that everybody is on the same page. That way you have the confidence to know that your plan is going to work.
Yes, because so often, Prashant, it's 2 different entities. They don't even know what the right hand, the left hand is
That's
doing.
exactly right.
So this keeps it so cohesive and so easy.
Yep.
This next question, how often will we meet or communicate? Discuss the frequency of meetings and communication to make sure it aligns with preferences and needs that you have. That's interesting because we've heard in the past that a lot of people don't hear from their current advisor for a year and a half. That can be a red flag.
It comes back to who's a good fit for you and what are your expectations. What I like to say is I love seeing our clients, and our team loves seeing our clients at least once a year, but 2 or 3 times is a little bit more typical, right? 2 times a year is pretty standard in our practice, and then we see our clients socially at different events and things like that, or as needed, okay? I think this is so important. Life is going to come at you and things are going to happen, right? You're going to buy a house, you're going to sell a house, you're going to have big money that needs to go out, you're going to have big money that may come in the future. When those things occur, you want to make sure that you can go visit with your planner to see how that's going to impact your retirement, right? And I think one of the biggest things is you got to understand whether or not you're going to get charged for that, right? So what we always say is when we visit with our clients for their reviews, I'm not like an attorney, right? I don't send an invoice for every hour that I meet with somebody, or when we do a phone call, I don't bill our clients for that specifically, right? So that I think is really important in understanding how the engagement is going to look like, and you got to make sure that it is exactly what you're looking for.
Yeah, absolutely. Yep. Let's jump into the next one. Can you provide references from current or past clients? Request references to gain insights into the advisor's performance, client satisfaction, and areas of expertise. That is a great one. I haven't heard that before, where people ask for references, but I think that's fantastic.
So I think where we go with this is you want to make sure, again, I go back to who's a good fit. Now, one thing that we take with the utmost responsibility at our firm is our client's security and their privacy, right? So we typically don't share client information. We never share client information, I should say, with anyone who's coming in to visit with us. Now, with that being said, if we find that we're probably going to be a good match for each other, there may be something that we can do to provide a reference here or there. But honestly, most of the people that come in to visit with us, they know very quickly whether or not we're the right fit for them. They'll know whether they're the right fit for us. And so that is a process. And I think a lot of people are able to come to that conclusion without needing a reference here or a reference there. But everyone's a little bit different, and we're happy to kind of entertain what that may look like and how important of a decision it ultimately is. So, you know, you're probably sitting at home, maybe you're working with somebody already, and maybe you've never gotten a second opinion. You don't know whether or not you're truly on the right track for your retirement. You have to pick up the phone and call right now. Okay, if you're sitting on the couch, pick up the phone and give us a call. It's 833-308-5200. If you've never had the opportunity to sit down with someone and ask some of these very important questions that we're talking about on today's show, it's a great opportunity. When you come in to visit with us, you leave your checkbook at home. Okay, it's totally 100% complimentary to come in and visit. And when you come in to visit, you're not agreeing to become a client. We're not agreeing to take you as a client, but what we are doing is we're going to figure out whether or not we're the right fit. And worst case, we're going to put together that retirement income plan, that portfolio stress test, and that Social Security optimization report for you. All of that is included in that complimentary visit with our team. So all you have to do is pick up the phone. It's 833-308-5200, or you can visit retiremaryland.com.
Prashant, thank you so much. To our viewers at home, that number to call is on your screen, 833-308-5200. We know you're in the viewing audience today with a lot of questions about how to plan your perfect retirement. Prashant and his team have the answers for you. Again, just call in 833-308-5200. We're going to take a very short commercial break here on Retire Smart Maryland, but when we come back, we have more questions that you should be asking if you're interviewing a financial advisor. Stay tuned.
My philosophy is that losses hurt more than gains help. And it's all about creating a strong foundation. And in my opinion, that foundation is the foundation of having income that you can always depend on.
Most of the financial advisors focus on the accumulation phase because that's the one who brings most of the revenue to the firm.
I believe that the strongest retirement plans are created with creating a solid foundation for where your income is going to come from, and then building the rest of the plan in as low risk of a way as possible.
That's why it makes us slightly different than other firms, that we focus on the distribution side, not the accumulation side. Distribution side is the most important part of the time because you're retired and you want to make sure you have all the income coming in.
While you're working, you're always just juggling money coming in and money going out. And when you retire, that doesn't really change. It's still very much about income coming in and expenses going out. What changes is where that income is actually going to come from. What we focus on is making sure that we can walk somebody from A to Z through their income, their investments, their insurance, their estate planning, their tax planning, and really wrap it all together in an easy to understand way that truly is focused on educating.
Welcome back to Retire Smart Maryland. My name is Cynthia Defazio, and I'm joined today by Prashant Sabapathi of Elite Income Advisors. Prashant, a great show. This is a lot of fun.
I love it, yeah.
Right? Because you don't know what I'm going to ask you.
No,
I
don't. And we don't typically talk about this stuff, so I'm loving this. This is great.
I am too. So here's the next one. How do you stay updated on changes in the financial industry? A good advisor should stay informed about industry trends, tax laws, and investment strategies. Inquire about their commitment to ongoing education and professional development. Prashant, why is that important?
Yeah, it's important because the world is going to look different tomorrow than it does today, right? And with everything changing so frequently and so quickly, really, you got to be up to speed on how those changes are ultimately going to impact your retirement plan. One great example of this is several years ago, Social Security eliminated, a couple different loopholes that people could take advantage of, and that immediately affected the way that we plan retirement, right? But if you had never known about that, then you would have been blindsided, right? We're talking about taxes all the time on the show. Tax laws are going to change at the end of 2025. Well, you need to understand how those changes are going to impact you, right? We have gone through things like the debt ceiling, the trade war from a couple years ago. Those things impact markets, they impact taxes, interest rates changing, impacts inflation. You want to know exactly how those things are going to impact your retirement plan. And so you need to understand whether or not your advisor is capable of communicating those changes to you. We do regular workshops. Like I do workshops pretty much 4 or 5 times a month all over Howard County, Montgomery County, Anne Arundel County. We do them everywhere, and we do them to try to keep people up to speed on all of the different things that they should be thinking about. And so I think it's super important that we're all on the same page.
I love that you're so passionate about education, Prashant, because it definitely shows. This next question, how do you assess risk tolerance? Understand their process for evaluating your risk tolerance and how it influences investment decisions. That's interesting because a lot of people don't even understand how much risk they're taking until they come into the office.
You know, it's such a great point that you're bringing up, and I'm glad that this was one of the questions because I've talked about this before. I talk about it in the book. I talk about it every single workshop I do, is that everybody has a different definition for those typical risk appetite words that we have: conservative, moderate, aggressive, right? And the issue is a lot of people come in, they say, I'm a moderate investor. And I say, okay, great. I love putting my clients in moderate portfolios. But what happens if we have different definitions of what moderate actually means? What if as a moderate investor, you're only comfortable losing 10 or 15%, but your advisor thinks a moderate portfolio should have the ability to potentially go down 30%.
Yeah.
Well, that's a pretty big difference right there. Wouldn't you want to know about that ahead of time?
Absolutely.
So here's one question when it comes to taking risks that I think our entire viewership should be able to answer. Okay, when you come in to visit with me, I guarantee you we will ask you this question. On the amount of money that you have saved for retirement, I don't care if it's $500,000, $1 million, or $5 million. If the market goes down significantly, how much of that retirement nest egg can you lose before it makes you uncomfortable? I think everybody should have an answer to that type of a question, and you should have that answer when you come in to visit with us, because we will ask it, and that is a crucial part of actually creating an accurate retirement plan. I mean, you don't want to come in, get a retirement plan that's based on a bunch of what ifs.
That's true.
You want to build it in the most accurate way possible. You know, I don't want to waste anybody's time when they come in to visit with us. Everyone's time is valuable, including mine, right? So to make it productive, you want to have those answers when you come in.
I love that response, Prashant, and obviously a perfect segue into our next question. This is great. How do you stay up to date with your clients' changing financial needs and goals? Assess how the advisor proactively adjusts strategies as your circumstances evolve over time.
Yeah, and so what I like to do is I like to boil things down to things that are simple and easy to understand. At the end of the day, your retirement lifestyle is simply just a function of what I call money in and money out, right?
Yeah.
Now, while you're working, that money in comes from a paycheck, and then you have your expenses, and you try your very best to save as much money as you possibly can. When you retire, it's still about money in and money out. What changes is the money in no longer comes from a paycheck, so it's got to come from somewhere else: Social Security, pension, your retirement savings. Now, as your life changes, your monthly income target is also going to change, right? Maybe you have a grandkid, a brand new grandbaby. What happens to those expenses? They start to go up.
That is true.
Because you want to, you know,
spoil
them. Yeah, exactly. And so those are the types of changes. When you come in for your reviews with us, we're going to go through, hey, how has your monthly income target changed? You've previously said $6,000 a month. Does that need to go up to $6,500 or $7,000 because of this circumstance or because of inflation, right? And those are the types of interactions that I think that you should be having. If you are not having that experience with your advisor, or if you're interviewing advisors, just come in and visit with us. It's 833-308-5200. Come in, get that complimentary, no obligation Retire Smart roadmap. It's going to include the income plan, the Social Security analysis, also a conversation about your taxes and Medicare. Starts with that phone call, 833-308-5200. You can also visit retiremaryland.com.
Prashant, thank you so much. To our viewers at home, thank you for spending time with us today. Be safe, be happy, and be blessed. We'll see you back next week on Retire Smart Maryland.